Welcome to our webinar on employee fraud, tips and traps to avoid. This session is timely given that March is Fraud Awareness Month. Breanne and I are excited to share information to assist with such a difficult topic for companies. From our experience, when management suspects their company has been a victim of fraud, emotions run high. A thoughtful approach is necessary to minimize the risk to the organization. This session is aiming to guide you through some of the important steps to consider as you navigate an employee fraud. Before we get started, what is fraud? What are we even talking about? One definition is that it's really just the wrongful deception intended to result in a financial gain. Our session today is focused on asset misappropriation. So when an employee deceives the organization and takes a personal benefit. So who are we? I'll let Breanne introduce yourself.
My name is Breanne Campbell, and I'm a partner in the litigation group at Scott Ventura Rudigoff. And my practice focus is on insurance defense work and includes insurance fraud files and files where I act on behalf of corporations or their insurers in claims against employees who have committed a fraud or theft.
Great. And my name is Bailey Rivard. I'm a partner in the Valuations, Forensics, and Litigation Support Group at MMP, based out of Calgary. Part of my practice is focused on investigating concerns of employee fraud and assisting companies and their legal counsel in the claims that flow from that. So this includes helping companies deal with suspected employees, proving their insurance claims, and acting as an expert in civil litigation and occasionally in criminal complaints as well. I also assist clients in putting in place processes to prevent and detect fraud. So before we go too much further, a quick disclaimer. This webinar is provided solely for information purposes. This does not constitute professional or legal advice for any one specific situation. Should you encounter a suspected employee fraud, you're encouraged to seek investigative and legal advice applicable to your specific situation. Now, this webinar is based on a series of articles that I've listed here that Breanne and I co-authored. These are a useful resource to go back to as they cover the topics that we're going to discuss today. You can find these articles either on the MMP fraud site or on the Scott Ventura Rudigoff website or on Mondac as well. Throughout our presentation, we've included some current statistics related to fraud from the Association of Certified Fraud Examiners 2020 report to the nation. These statistics are from a survey conducted by the ACFE of organizations that have experienced employee fraud. The most common type of fraud scheme is asset misappropriation, which we're talking about for the most part today, the taking of corporate assets for a personal benefit. And those had a median loss of $100,000. The least common type of fraud, but the most expensive in terms of financial loss, is financial statement fraud, where the financial statements are intentionally misstated for the employee or the company to receive some sort of inappropriate benefit. So we're going to start at the beginning, when a company first becomes aware of financial irregularities in its business. Where there is suspected fraud, this requires a quick response, and the company must be careful in how it acts to avoid unnecessary risk. So some things for management to be mindful of, the preservation of evidence, the involvement of employees and third parties in the investigation, and keeping in mind the potential outcome of the review. Where do you see this going at the end? The goal here is to address the issue, but also to minimize the risks that come with an investigation, in particular for the period of time before outside expertise is brought in. Now, the first step is to understand the financial concerns or the allegations that have been made. You need to understand the information that is raising the alarm. Now, this might be a complaint, or it could just be unexplained financial issues for the business. The goal is to identify what further information is needed to really complete that picture. There are a few key areas that are going to help guide you in that process. So before moving forward, you need to put a plan in place, and we call that our investigation plan. You need to consider who will be on the investigation team, what information is required, how that information will be obtained to protect the integrity of the information, and how communications are going to flow from there. So specifically, there are a few key questions that should be considered when you're putting this plan in place. So the first is, who will be involved? At the early stages, it may be difficult to know who may be involved in a fraud. The team should be limited and include only those with a need to know. Anyone that could potentially be involved in the fraud should not form part of this team. This ensures that there's no advance warning that allows individuals to cover their tracks, and it also protects the company from a complaint from suspected employees if the allegations don't have any merit. We had a file a few years ago where fraud was suspected, and following an independent investigation, we found that there was no wrongdoing intended. There was no fraud, and the employee simply required training on the accounting system. If the company had gone ahead and taken steps that alerted others to the issue, potentially that employee could have been blackballed as somebody that was doing something nefarious when in fact they weren't. The second question is, what information is required and where can you find it? So for an asset misappropriation fraud, this typically includes accounting and bank records, as well as other business records specific to the investigation. So for example, if there's a concern about the inappropriate use of a corporate credit card, you should be gathering the credit card statements, any expense reports submitted, supporting receipts for the credit card transactions, bank records showing how the credit card was paid, and the accounting entries for those transactions. So how did the payment actually end up in the accounting records? You also need to consider how the fraud was covered up or how it may have been covered up. Were there any adjusting entries posted in the accounting system to hide the inappropriate transactions, or are they there plain to see? Information may also be contained in emails or text messages if the fraud involved more than one person, either to carry it out or to cover it up. And we'll talk about steps to deal with electronic data in a moment. You also need to ask yourself, when will each step of the investigation take place? Timing may be important. If records are stored in public spaces within an office, the review may have to take place after hours to ensure that no one is alerted to the investigation too early. The big question, the hard question, what to do with the employee. This can be a very difficult situation to navigate. You need to consider what access the employee has to the premises and to the systems like accounting and bank access. And this includes not only physical access, but also remote access to the systems. If the company could be exposed to imminent risk, you may need to lock the employee's access to key IT systems and the premises until the investigation is complete. Dealing with an employee is one of the riskier and most difficult decisions to make at the early stages of an investigation. Be careful taking any steps with a suspected employee until at least a preliminary investigation is complete. Regardless, you should get legal advice before communicating with the employee, as this could result in a legal claim from that employee if it's not done properly. You'll need to balance the alternatives and how to deal with the employee, considering the risk of keeping the employee in their role if the fraud is likely to continue, the potential that the employee is innocent of the allegations and should be treated accordingly, the whole innocent until proven guilty, and the perception and impact on other staff as a result of any decision. You should also keep in mind, how does the plan need to adapt as you progress through it? So as you move through the investigation steps, consider that the plan is really a living document. If the initial review supports the suspicions of wrongdoing, the investigation may need to be expanded. So for example, where we're called in to investigate allegations of inappropriate expenses on a credit card, we would consider the employee's other responsibilities and other access points. So in our credit card misuse example, if the employee is also responsible for payroll, you should review the payroll records to see if there are any concerns about inappropriate payments through the payroll system as well. The initial review may also identify other employees or third parties that may be involved or that had knowledge of the fraud, and that would need to be investigated further as well. And then you come to the question, how to communicate your findings. Once the initial review is complete, you're likely ready to consider communicating with key decision makers and third parties that have not previously been involved. That may include senior management or the board of directors. It could mean the financial statement auditor, a lawyer for employment and corporate advice if you haven't already received that, your insurance company, if there's a crime or a fidelity policy in place, you're going to need to start communicating with them, and potentially a forensic accountant if there is a need for an independent assessment or specialized expertise. We're often retained to investigate fraud at the early stages, but in some cases, management will conduct its own internal investigation and then still hire us to complete an independent investigation after the fact. That may be done for our independence to ensure that there's no bias in the investigation, in particular where the staff has high conflict or where the suspected employee has conflict with others in the organization, and there could be seen to be a bias. We're also retained where our expertise, if the fraud is complicated or difficult to prove, and sometimes if it's required to support the employee's termination or assist in any claims that the company is considering. And Breanne's going to touch on this in a few minutes. As you execute the investigation plan, act as if all information is going to be evidence at some point. Some best practices to ensure that the information collected can be relied upon later if needed depend on the type of information. So for data stored on devices, a computer, a mobile phone, do not perform any review without preserving a forensic image of the device by a qualified IT person. This may not be your internal IT person or a consultant. You want somebody that has expertise with preserving electronic evidence. We've been involved in so many cases where a company accesses information on an employee's computer and as a result alters the data. We always recommend that a forensic image of the drive be preserved and the working copy can then be reviewed. This initial forensic image is fairly inexpensive and may provide additional valuable information. We have cases where our clients have reviewed an employee's computer and cannot find anything useful, but our computer forensics team is able to recover data that had been deleted, which may be key to the investigation. For physical documents, such as bank statements, invoices, anything that's in paper form, make a note of where that information was found. Is it in the regular filing system or is it in somebody's office? If documents are clipped together or have notes, like a sticky note on them, identify that before reviewing, as the way that documents are grouped together may be relevant to the fraud. Do not make any notes or markings on the documents. If required, keep the original version and make copies that can be marked up by the investigation team. We have cases where we're called in after an internal review is complete, and it's difficult to determine whether notes were on the original documents or added later during the investigation, and it makes the evidence less reliable. Consider also the employee's workspace. You may want to perform a search to identify any additional information that may be relevant to the allegations. It's best to take photos or to draw a map of the office or the workspace and identify where any relevant documentation was found. We had a case where an employee was suspected of altering checks, and in the bottom of one of her drawers in her desk, we found practice pages where she had tried to line up the payee information and the amounts on a photocopied check, printing from her computer until she got the settings correct. It was important that we identified these were hidden under documents at the bottom of her drawer. Now, a really difficult one is personal devices or personal workspaces. If the employee is using a personal laptop or a cell phone for work purposes or is working from home, which is very common right now, it may be tricky to get access to that information. You should consult a lawyer on options there, in particular around getting access to personal devices. And finally, you need to consider your insurance policies and legal steps, which Breanne will go through in this next section. But before we do that, billing fraud, payroll fraud, and check tampering are more common in small businesses. So these are all types of asset misappropriation schemes. These are not just issues facing larger companies. Frauds impact even small businesses that may not expect it. So Breanne is now going to take us through the steps to mitigate the risks after an employee fraud.
Thanks, Bailey. So once the company has done a preliminary internal investigation, and the fraud looks like it's going to have some merit to it, you're going to want to engage some third parties as early as possible. And so in particular, you're going to want to engage a lawyer and an insurance broker. Your insurance broker, and the broker is going to take a look at your policy if you have one in place to determine if there's any coverage available. We'll talk about that a bit later. And a lawyer is going to help you navigate all these employment considerations that are going to crop up. And they're going to be able to attend court on the corporation's behalf in order to obtain some pre-judgment remedies, which we'll get into a bit. You might also want to talk to your accountant or your auditor at that preliminary stage. So the employment considerations that come up is, well, what do we do with this employee that we suspect has acted fraudulently? Are we going to suspend them with pay, or are we going to terminate them? And every situation is going to be unique. You might have sufficient information early on in the investigation to warrant a termination, but more often than not, you're probably going to need to suspend the employee with pay pending a further investigation. Obviously, you need sufficient evidence to warrant termination for cause, and you're not going to have that at an early stage. And if you suspend with pay, you have the benefit of removing the ongoing risk that the employee can pose, and you're also going to avoid a wrongful dismissal claim. But before you take any steps with an employee's employment, you should contact an employment lawyer. So when it comes time to interview the employee, you should keep in mind a couple of these tips that I'm going to talk about. So the interview should be conducted by someone with experience in interviewing. So someone higher up in human resources, if it's going to be within the corporation itself, or alternatively, a third party can conduct the interview like a lawyer or an investigative firm. In either case, you should have a witness from outside the company attend. We recommend that you do all your research beforehand, gather as much information as possible so you can be prepared to respond to the employee if they start denying any of the accusations or denying their involvement or making excuses for certain odd transactions that you've noted. You want to be able to come with receipts, as they say. So maybe you want to be able to bring some physical evidence so you can start pushing back against the employee if they are denying their involvement. So before you start the interview, you want to obtain the employee's authorization to have the interview recorded or transcribed. If they don't give you that authorization, then you can carry on with the interview. And if you do happen to elicit a confession, which actually happens more often than you think, if you happen to elicit a confession at the end of the interview, you can type that confession up and have the employee sign it. When you're starting out the interview, just introduce the topic broadly speaking. So say, we've noticed some odd transactions and we just want to get to the bottom of it, try to resolve it. And you can advise that, you're interviewing other employees as well in an attempt to resolve the issue. If it's possible, I recommend that you maintain like a friendly and understanding approach with the employee in order to gain their cooperation. If it's really, if it's interrogative and, a dark and cold room, you might not get the employee's cooperation. They might seize up, right? So try and keep it friendly. And keep in mind that the goal of the interview is to corroborate the evidence that you've already found, determine if there's any fraudulent activity that you've missed, determine the how and why the fraud was committed. The how is going to help you understand what systems or controls failed in this case to allow the employee to commit the fraud. And the why is important because you want to have a better understanding of the employee's motive in this case. So, do they have a gambling or a drug addiction? Do they have financial hardships at home? Or maybe this is more about like the corporate culture, which allows these types of frauds or thefts to go unpunished over time. And maybe that's why they did it. So just getting an understanding of the why is important. Obviously, you want to determine the extent of the fraud, and you want to determine if any other parties are involved. So I want to make sure that when you're conducting the interview that you don't make any promises that you can't or won't keep. So don't promise to the employee, well, if you sign this confession, we promise we won't press charges, or we promise we won't go after you in court for the funds that have been lost, because obviously that confession doesn't mean very much if you're bartering for it. And then depending on the circumstances, you should consider having a psychologist ready to speak to the employee on a confidential basis after the interview has concluded. You just want to have some safeguards in place to make sure that they're okay, because this is a highly stressful situation for some individuals. The fraud may have been looming over their heads for years, and they have a lot of guilt associated with it. And you just want to prevent any further fallout arising from the investigation. And in my experience so far, the employees who commit the theft are actually good people that have just done a bad thing. And so we just want to keep in mind, like, preserving their mental health going forward. Okay, and then as Bailey discussed, another employee consideration is revoking access to the company systems. So just quickly, if they have physical access, you're going to need to take back their access card. If it's digital access, you're going to need to cancel their VPN and remote access. If they have hardware, you're going to need to get that back. So that would be a company phone and laptop. So you might need to send another employee out to the employee's house right now if they're working remotely in order to get back that hardware. Obviously, that's only company hardware. If it's a personal device, that's a whole other can of worms, and you're going to require a court order, an anti-pillar order, in order to get that information. Make sure you revoke any signing authority at the bank right away. And as I said, arrange for the return of devices. So you can send an employee out, or you could send a prepaid shipping package out to their home. I mean, there's various options available depending on the ongoing risk that we think the employee poses to the organization. Okay, so protecting the company from ongoing risk. A lawyer can attend court on behalf of the corporation to seek certain pre-judgment remedies against the employee. And this matters when you're trying to preserve assets, trace the funds from the organization into the employee's bank account. And if you're trying to preserve the employee's own assets for a future date, if you want to obtain a judgment against the employee and collect on it by seizing certain employee assets. So we'll start by talking about an attachment order. And so this is an order pursuant to the Civil Enforcement Act, and that will essentially freeze the employee's assets so they can't sell them before the company has had an opportunity to obtain judgment against the employee. So this is all governed by Part 3 of the Civil Enforcement Act. And there's a test that's applied by the Act in the courts. And so the court must be satisfied that A, there's a reasonable likelihood that the claimant, or in this case, the employer, that their claim against the defendant employee will be established, and that there are reasonable grounds for believing that the defendant employee is dealing with his or her exigible property, or is likely to deal with the property otherwise than for the purpose of meeting his or her reasonable living or business expenses, or in a manner that would likely be to seriously hinder the employer in enforcing a judgment against the defendant. And so, we want to prevent a scenario where the employee transfers the house into a spouse's name in order to avoid a future judgment. So, or moves all of their funds out of their bank account. We're just trying to freeze those assets so that we can seize them at a later point if we do get a judgment. So regarding that second requirement, in a manner that would likely seriously hinder the employer in the enforcement of a judgment, the courts have held that in where the cause of action is fraud and the plaintiff company has shown a reasonable likelihood that the cause of action will be established, then the court can conclude or assume on that basis alone that there are reasonable grounds for believing that the employee is likely to deal with his exigible property to the plaintiff's prejudice. Basically, the court's going to assume that if the employee is accused of fraud, it's going to take steps to try and prevent the employer from actually realizing on those assets at a later time. So just other interesting points about attachment orders is that, well, the most important thing is that if the court's going to grant it, they can do various things, but most importantly, they can prohibit any dealing with the defendant's exigible property. So that's going to freeze it. Alternatively, they could impose conditions, so they can only spend, a certain amount on living expenses every month. They can appoint a receiver. They can do a whole bunch of things. They have a ton of discretion on this. Some other notable points are that in order to get an attachment order, the company needs to undertake in a filed document to pay damages to the employee or a third party if the court ultimately decides that the remedy was unwarranted. Also, any attachment order should be granted with as little inconvenience to the employee as possible, and it should not attach more property than necessary to satisfy any judgment. And that's why at this early stage, you want to have a forensic investigator involved so you can start quantifying the loss. On my most recent attachment order, we went into court about a week after we discovered the loss and got these remedies that I'm discussing. And we tallied about $600,000 of loss. We'd only gone back a couple of years in the record so far. And so the court, they're only going to grant us permission to attach about $600,000 worth of assets. Obviously, the cases are going to differ significantly, but eventually that fraud ended up being 2.6 million, and then we have to deal with that at a later time. So the next order that I'm going to talk about is a Norwich Order. And this is a freestanding right of pre-action discovery of a third party. So for example, an employee's bank might be compelled to produce the employee's bank statements to the employer. And this type of relief has been granted in a bunch of different situations, including to trace and preserve assets of an employee suspected of theft. So in determining whether to grant this order, the court's going to consider a number of factors. So such as whether the applicant or employer has provided evidence sufficient to raise a valid, bona fide, or reasonable claim, whether the applicant has established a relationship with a third party for whom the information is sought. So in a recent case, we got a Norwich Order and we were able to trace or identify the employee's bank accounts by going through his prior expense submissions. So we could see where he was directing the funds through his auto deposits. Another factor is whether the third party is the only practicable source of the information available, whether the third party can be indemnified for costs to which the third party may be exposed, and the all-encompassing whether the interests of justice favor the obtaining of disclosure. So once you have the information from a Norwich Order, for example, bank statements, you can review them with an eye to tracing the funds from the organization into the employee's account, and also to get a better understanding what assets the employee may have. So also recently on a Norwich Order we retained, the employee had set up a credit card for his partner, and the partner was spending about $12,000 a month on that credit card. And as a result, we issued a statement of claim against that partner as well, on the basis that they knew or ought to have known that this money he was receiving was from an illegitimate source. As a spouse, you should have an idea of what your partner is making every year. And if you're living way outside of that, then you should have known that it was an illegitimate funds. Okay, the last order we like to get on a prejudgment basis is a name search pursuant to the Land Titles Act. So under Section 16 of the Land Titles Act, the registrar maintains a record that enables it to provide a list of land owned by persons who have the same name as the person requested. And you need an order in order to get that information in cases like this. There's other ways to get it outside of cases like this. So the court can direct the registrar to conduct and furnish the results of a name search on the employee. And once you have that, you can see if the employee owns any land, any property, and what mortgages are registered, and if there's any other security registered against title, and just get a better understanding of the employee's financial situation. Okay, and last on this slide is obtaining an independent forensic investigation report. So a company might want an investigation report for a number of reasons, but obviously it's going to assist with the early investigation. A forensic accountant is going to be able to quantify the loss, which is useful for those prejudgment remedies we talked about. How the fraud was committed, potentially. They're going to be able to identify what systems and controls failed to allow the fraud. And they can help you with submitting the proof of loss to the insurer, which we'll talk about a bit later. It's also going to help with obtaining summary judgment or at trial, and then also on recovery of the loss. So we can file an affidavit with their report appended to it. The accountant will swear the affidavit. And again, they'll be quantifying the loss, and it's going to help trace the assets. Next slide, please. So did you know the typical fraud costs a company $8,300 per month, and the average duration of an employee fraud is 14 months? So that means that losses might be bigger than you think they are. Companies may not realize that these losses are cumulative and they can add up fast, and they're not necessarily one-off events. And that's why we strongly recommend that you consult an insurance broker to get information about obtaining a crime policy for insurance, which will have higher limits than what you might get in an insert to your insurance package. And so in my most recent file, the fraud dated back 7 years at least, and it probably went back further than that, but we didn't have the electronic canceled checks further than 7 years ago. And like I said, in those 7 years, $2.6 million was stolen. So in addition to the direct financial loss caused by the fraud, the company may have to incur further expenses in dealing with the investigation, terminating the employee, and hiring legal and forensic accountants to recover on the loss. And so in determining whether the benefits of such steps outweigh the costs, the company is going to need to consider numerous factors, including whether such steps will help prevent a future loss by identifying vulnerabilities in the company's current accounting practices. And that's worthwhile in and of itself, so you can prevent future loss. What message the company wants to send to its employees. For example, fraud is not tolerated. We're going to take steps to recover on the loss, and this isn't just going to go away. This is not part of our culture. Whether the company has insurance that will pay for some or all of the expenses. So if you had a crime policy, you might be able to get an endorsement, which will include coverage for the cost of legal and forensic accounting, and sort of take that off your plate when you're doing this cost benefit analysis. And whether if successful in obtaining a judgment after you sue the employee, is the company going to be able to collect on its judgment against the employee? You know, if the employee has a gambling addiction and all that money went to the casinos, there might be an issue there. So that might weigh in your decision-making on whether you want to come into litigation. Okay, next slide. So did you know the median loss of a fraud committed by an employee is $60,000? This number increases to $150,000 at the manager level and increases again to $600,000 at the owner executive level. So not surprisingly, the more power and independence an individual has, the more damage they can do to the company. Okay, insurance. This is my favorite part of the webinar. I think this is the most important thing and the key takeaway that everyone should get from this webinar. So obviously, insurance is the easiest way to collect on a loss. If you have a policy in place with sufficient limits, this is going to be a much simpler process for the organization than if you have to commence litigation against the employee. So there's a couple different types of policies that exist. There's fidelity bonds and crime policies. And then the company could also have inserts to say like a property policy. If it's just an insert to a property policy, You're going to have lower limits. It's not really going to be tailored for the company's specific needs. And when I say lower limits, you're probably looking at about $50,000 per loss, which, as we just saw, isn't really going to be sufficient to cover some of these losses that we see. If you have a standalone crime policy, though, it can be much more tailored to the company's individual needs and the industry that they're in. And there'll be way higher limits, obviously, within a company premium. And like I mentioned, you can have an endorsement added, which will include coverage for costs to pay for forensic investigators and legal advisors and so on. Obviously, that will come at an additional premium. So generally, to be recoverable under insurance, you'll have to show that the employee acted with intent to harm, coupled with the intent to profit. And additionally, you're going to have to show that the losses were actually incurred by the insured, the company, and not a third party like a vendor, because these are not liability policies. So on the date of, the other thing is that the two policies there's two different types of determining when the date of discovery will be determinative. So there's date of discovery and there's date loss sustained. So date of discovery means that the losses will be covered even if they date back 7 years ago, but are only recently discovered. And other policies will provide coverage for a certain discovery period after date loss sustained. And this can be as short as 90 days or as long as 2 years. Additionally, to be recoverable, the loss must be direct, and exclusions may apply for losses. So losses not realized, like loss of profits or loss of interest on the money had it not been stolen. And here's something really important, is that coverage is terminated immediately upon discovery of any dishonest act. So if you're going to simply reprimand an employee for a dishonest act, be aware that coverage may later be denied for additional losses if that dishonesty continues. Make sure to notify your insurer of a potential claim early and pay attention to the deadlines in your policy. You'll need to submit a proof of loss, which is going to quantify the loss and explain how it happened and which employee is responsible. And there's usually deadlines to file that, so just be aware of that. And again, we recommend that you talk to your insurance broker because this is a really complicated area. Finally, subrogation, under that insurance bullet. So subrogation is basically if an insurer pays out a loss to the company, it will step into the company's shoes and issue a statement of claim against an employee to try and recover on that payment. And if the insurance limits don't cover the full loss, the company and the insurer can enter into a subrogation agreement in order to split legal fees and split anything that's recovered on a pro rata basis or however else the parties agree. Obviously, throughout this, all the company is going to have an obligation to cooperate. That's one of the terms of the policy. So asset review. An asset review will be made easier if you've already obtained some of the pre-judgment remedies we discussed above. So if you already have some information from land titles, you'll be able to see if the employee owns any property, and if anybody has already registered writs or security against the land. You'll be able to figure out, well, is the property value greater than the mortgages registered? That kind of thing. If you have the third-party bank records from the Norwich Order, you can look at them to see if they give any indication about what assets the individual may have. And finally, you can get a credit report and a PPR registry report, and that's just going to give a better picture of the employee's overall financial health. You'll see reports from lenders and creditors and get an idea of the debts the employee already has. Issuing a statement of claim, we've sort of discussed this already, but basically this is a legal document that kicks off litigation. And this is where the company will sue the employee to recover on the loss. The company should consider who else it can name as a defendant that might be liable for the loss, just in case the employee doesn't have deep pockets. So the auditor may have failed to detect the loss. The officers or directors of the company may have breached their duties to manage the company's assets, and the financial institution may have accepted a fraudulent check. Okay, slide 13. Did you know that 42% of fraudsters were living beyond their means and 26% were experiencing financial difficulties? And so this stat just goes to show that it might be difficult to collect on a loss directly from the employee, which is why you want to consider suing other entities if there is some liability there. And hopefully they'll have insurance. And this is also highlighting why you should have insurance yourself. Okay, collecting on a loss. I'll try and get through this as quickly as possible because I know we're running out of time here, but there's various ways to obtain a judgment against an employee after you file a statement of claim. So the first way would be noting the employee in default, and that's where they didn't bother filing a statement of defense to defend the allegations in the statement of claim. So in order to do that, you're still going to need to quantify the loss. So you're still going to probably need a report from a forensic accountant, not always, but most of the time. And in that case, liability is not an issue, so it makes it much easier. Another option is summary judgment. And in that process, we're basically saying to the court, we think our case is so strong, we don't need a trial for this. There's no genuine issue requiring a trial. All of the evidence can be presented to the court on the paper record via affidavit evidence. And again, you can rely on a forensic investigation report in that process. So in summary judgment, liability and quantum both might be an issue. So we're going to need to prove to the court that the employee, in fact, stole the funds, and we're going to need to quantify the loss. And so we want to outline in the affidavits for the court, so it's very easy to read where the money came from and where it went. We're going to want to show the court that we've traced these funds. And then obviously we can go to trial, but try to avoid this at all costs. It's expensive, it's multi-day, requires in-person evidence. And just try to avoid it because obviously you don't want to be chasing, throwing good money after bad. Okay, collecting on a judgment. So once you have a judgment, there are a couple of things you can do to try and collect on it. So start with a Form 14 statement of debtor. This is a document that requires the debtor to fill out the document outlining all of their assets and liabilities. Then you can conduct an examination in aid of enforcement, and that just requires the debtor to answer questions under oath about their assets. You can serve a garnish summons on third parties. So for example, if you have a new employer or their bank, and that's going to require the bank or employer to pay the funds into court rather than to the employee. And so then the money posted into court will be distributed based on the priorities outlined in the Civil Enforcement Act. So someone with registered security is going to rank above a writ holder, which is what the employer would be. Finally, you can retain a bailiff and send a bailiff out to the employee's home to seize assets. Just keeping in mind that certain assets are exempt from seizure. So for example, the employee is entitled to $4,000 worth of clothing, one vehicle worth up to $5,000, and a principal residence up to a value of $40,000. Okay, and then you have to decide, are we going to report this to the police or the RCMP? And when you're making that decision, keep in mind that a criminal conviction is required to seize certain assets like an RRSP. Again, you may want to let the company know, the rest of the organization know that fraud is not tolerated. All of that said, it's difficult to get the police motivated to become involved. Often they won't become involved until the fraud is over at least $500,000. And that's why we like to present it to them in a package wrapped up with a bow, so they'll actually look at it. Okay, on the next slide there, did you know that a lack of internal controls contributed to nearly 1/3 of frauds? And so I'm going to turn it over to Bailey again to discuss preventing and detecting employee frauds.
Great, thanks, Breanne. So at the conclusion of an investigation, we're often asked for insight on what went wrong. And in these cases, companies should be considering how the fraud was perpetrated, lapses in control or an absence of control that allowed it to happen. And in some cases, that might have been an override of control. The red flags that would have allowed the fraud to be detected sooner and why those were overlooked. You should be considering the gaps in the control framework or issues with the culture of the organization and steps required to reduce the risk of a similar situation happening again, which is obviously the goal. Regardless of whether a company has ever endured an employee fraud, It's important that management and the board consider the risks of fraud for their business and put in place the appropriate measures to mitigate those risks. It's not possible to prevent 100% of fraud, so early detection is critical. The median duration of fraud schemes in the ACFE study that we've referenced was 14 months, and the sooner a fraud was detected, the less the financial loss sustained. Now, the starting point is a fraud risk and an internal controls assessment. So consider, where is the company most vulnerable to fraud losses? You should consider the specific fraud schemes that apply to your type of organization and industry. So put yourself into their shoes. If I was a fraudster, how could I steal from this business? And then you assess the likelihood of that happening and the impact that it would have on the business. You'll need to evaluate the controls that you currently have in place to mitigate those risks, and then put in place controls to address any residual risk down to an acceptable level. While it's unique to every business, common areas of focus are usually around cash receipts and payment of funds, and other valuable assets like inventory and intellectual property. Intellectual property tends to get overlooked, but it's oftentimes the most valuable asset a company has. One of the most effective ways of minimizing fraud risk is with appropriate segregation of duties in the core finance functions. No one employee should be able to initiate and complete a transaction or have responsibility for more than one of the 4 key areas. So the first is custody of assets, having access to cash, checks, or the bank account. And that includes collecting payment from customers and paying vendors and employees. The second area is the authorization or approval of a transaction. So that typically is bank signing authority, and it could also be the approval of expense reports. The third is recording transactions in the accounting system. So taking the information from the actual transaction and getting it into the accounting records. And finally, the person that's responsible or the role of reconciling the accounting records or performing other control activities. So bank reconciliations are the main example, but it may also be looking at aged receivables, aged payables to see if there's any anomalies or risks there. For smaller organizations, proper segregation of duties may not be possible. Many companies are experiencing this even more during COVID-19, where staffing levels may be reduced. But remember, if there is not proper segregation of duties, there is an opportunity for employees to commit fraud through the custody of assets and authorization, and to conceal the fraud by recording the transactions and performing reconciliations. If these duties are not segregated, compensating internal controls and management review become especially important. So one way to supplement controls without more staff is to use IT controls that are already embedded in the accounting, banking, and other key systems. So a good first step is setting appropriate authorization and access levels. So only employees that require it have access. If needed, you can also grant view-only access so people can still see the information, but can't make any changes or authorize transactions. Also consider limiting the administrator rights. Administrator rights allow someone to go in and make changes to those access levels. So it's great if you have them in place, but if somebody can go in and make changes, it's not a very good control. Some systems have exemption reporting options or audit reports. So an exemption reporting is when there's an alert when someone makes a change to access levels or other critical changes that are unexpected. The alert pops up typically right away as the changes are happening, and it can be reviewed to ensure that the change is appropriate. Does it make sense for the business, and was it authorized? Something that's not as quick to alert you is an audit report or a log that may provide details of the changes made in the system. So for example, an audit report or on payroll could identify new employees added, changes to the direct deposit information, or changes to salary and benefit amounts. Management could then review these reports to ensure that all changes were authorized. This can be helpful for key risk areas and to ensure that there hasn't been any kind of override of the internal controls. Restrictions around banking and credit are also key for all organizations. So ideally, a company would restrict the ability to authorize payments from the bank account, including any direct bill payments, electronic fund transfers, or wires. Most banks can set up fobs or other passwords for two-person verification before funds are released, specifically at a high dollar threshold. And then ensuring that dual signing is required on checks, keeping all cash and checks locked up and never using pre-signed checks. I know right now, it seems pretty onerous to have two people come together to be able to sign off on checks where we have that physical separation. But the cost of convenience for having pre-signed checks could be huge. Now, if the company has an internal audit group, they would be involved in the fraud risk assessment. Reviews would then be conducted regularly for the high risk areas and periodically for lower risk areas as well. And all findings and control recommendations should then be communicated up to those charged with governance. We have seen cases where the internal audit group or the finance group responsible for monitoring controls felt like they couldn't communicate directly or transparently with those charged with governance because it reflected poorly on the management of the organization. That open and transparent communication is really, really important. For smaller companies, management will need to review the banking, accounting, and other risk areas. The internal audit function is typically not going to be there. In those cases, management's role becomes critical, in particular where there's not that appropriate segregation of duties. This review should be performed by somebody that is not also responsible for recording and reconciling the bank and accounting systems. Now, when I talk about a review, management should perform a thorough review, at least monthly. Often companies have policies around the review and sign off of key reports, things like aged receivables and bank reconciliations. But we've seen cases where there's essentially a rubber stamp sign off to adhere to the policy, but the review is not done with that critical eye that's required. Often when we're brought in to investigate allegations of fraud in smaller organizations, particularly with family-owned businesses, we find that the team has worked together for a long time and that there's close relationships, which is great. But as a result, that management review may not have taken place at all, or it's done at a very cursory level because the trust in the team runs so deep. Trust is not a control. It is important to trust, but also to verify. And finally, the internal control framework should be reviewed periodically to ensure that the processes are working as they were intended, and if there are gaps, that those are filled. So did you know a significant number of employee frauds are detected by tips? 43% of the cases in the ACFE study were identified through tips. And this is significantly more than any other means of detection. So does your company have a confidential reporting mechanism in place? We'll talk about the benefit of that in a few minutes. So in addition to the fraud, risk, and internal control assessment, we've identified 5 other key areas in the prevention and detection of fraud. And these are things that we see over and over again when we're reporting back to management as to what went wrong. So the first is the code of conduct and financial policies. Companies will often document the expectations of their employees in a code of conduct or a code of ethics. Policies are then put in place to document specific financial rules. So the code of conduct provides more of that ethical framework for all areas of the employment relationship. So for example, you will put the best interests of the organization ahead of your self-interest in all business dealings. Whereas policies tend to be more prescriptive. So for example, you will only use the corporate credit card for required business expenses with detailed supporting receipt for all transactions to be approved by your supervisor. So at a very different level. These are both important tools that may help prevent inappropriate behavior. Where these are not in place, there's an increased risk the employee may claim they were not aware of the expectations in order to justify their actions. So some best practices to consider would be to review the code of conduct and the policies with employees when they're hired, and on an annual basis, or of course, any time that changes are made and updates are made, they should be reviewed again. And having that employee sign off their acknowledgement that they have read and understood the documents. You need to ensure that policies are specific for key risk areas, but broad enough to ensure that all non-business transactions are covered. So for example, if you have a list of expenses that are not allowed in your policy, an employee may claim that a personal expense is allowable if it was not included on that list. The policy needs to be broad enough to cover everything. It is really important that policies are applied consistently for all employees, except to the extent that differing authority levels are set out in the policy. So it needs to be, for everyone at the same level, the policy needs to apply. And in the event of a policy is violated, ensure the issue is addressed promptly and remediation steps are carried out. So keep in mind that if the policy violation is fraud and the employee is only reprimanded, this sends a message, and there may not be insurance coverage should a larger fraud be discovered later on due to the same employee's actions. So when deciding what to do, it's a fine balance between the employment and then the insurance and risk considerations. We've all heard the term tone at the top, which is really speaking to the ethical culture as demonstrated from the top of the organization. For an employee fraud to occur, the employee must be able to rationalize their actions. This rationalization may take the form of everybody's doing it, or that the actions are justified because of a negative perception about management or others in the organization. We've investigated numerous frauds where this was the case, most commonly where management was perceived to have either looked the other way or swept bad behavior under the rug for some individuals. Policies and codes of conduct are only effective in preventing fraud to the extent that employees believe they apply to everybody in the organization. So if employees are seeing others acting without integrity or policy violations tolerated without recourse, this sends a message that management does not take these expectations seriously. And it opens the door for rationalization for an employee's own inappropriate conduct. And now we come back to the whistleblower program or hotline. Whistleblower has different connotations for people. What we're really talking about is having a confidential reporting mechanism for employees. So a moment ago, we shared the statistic that 43% of the cases in the ACFE fraud study were identified through tips. Of those, companies with a hotline detected frauds more quickly. So they detected the fraud in 12 months as compared to 18 months for those companies without a hotline. And early detection meant that the fraud losses were cut in half. A whistleblower program or other hotline allows people to report suspicions of fraud or other wrongdoing confidentially. This program should allow an individual to provide information anonymously if they choose, as the fear of retaliation or reprisal may cause people with valuable information not to come forward. In many of the frauds we investigate, after conducting interviews, we find that often employees knew or suspected that a fraud was going on long before it was uncovered. And in these cases, employees either had the perception that management would not take the complaint seriously or feared job loss or retaliation at work if they came forward. In a few of these cases, the individuals confirmed that if they had a way of reporting their suspicions confidentially, they would have, and the financial loss would have been a fraction of what it was in the end. Employees also need to trust that any allegations made will be taken seriously and investigated. A lack of trust in the process undermines its effectiveness. For some larger organizations, a confidential reporting program is managed internally. So typically the information would be reported up to internal legal counsel or a senior human resources person. For most smaller companies, administering a hotline it's not possible. So for them, the program is typically outsourced to companies that can provide the service independently and more cost effectively. So for example, MMP operates a confidential reporting program called Ethics Alert that would be delivered to companies that can't operate that service internally. Now from there, fraud awareness training. So while it's great to have a hotline in place, this will only be effective if employees know what to look for. They need to understand what fraud is, what it might look like in their company, and the red flags to be aware of. By providing training in a workshop format, there's also an opportunity to get feedback from employees on the risk areas in the day-to-day operations that management may not have already identified. So that feeds back into the fraud risk and internal controls assessment. If a hotline is in place, employees should not only be trained on the red flags of fraud, but also on the Whistleblower Program and how it can be accessed and used. This is also a really good time to talk about the importance of business ethics and the relevance of the code of conduct and other policies. And finally, we come back to insurance. So even companies with the most robust fraud prevention strategy and internal controls cannot eliminate the risk of fraud occurring. Employee frauds are most often an ongoing scheme. They develop over time. They're not a one-off event. So as a result, companies may underestimate the damage that an employee fraud can have on their business. We've worked with companies that were virtually bankrupted because of an employee fraud. To mitigate these potential losses, companies should review their insurance policies and talk to a broker about what is most appropriate for their business. And our final did you know? Organizations with fraud awareness training for its employees are more likely to gather tips through formal reporting mechanisms such as a hotline. It was an increase from 37% without the training up to 56% for companies with training. So that added step really does pay off. And with that, I will, we can address any questions. I don't think we have anything in the Q&A section right now. If anyone has any questions, they can post them in the Q&A, or we are over time. And so if you want to talk offline, you can contact either Breanne or myself directly. Our contact information is on the slide. And you can also access the 4 articles in the employee fraud series on the MMP fraud site or on Scott Ventura Rudicoff's website. And the link to the MMP fraud site is included on this slide as well. Will the presentation, just in the Q&A, will the presentation be available after? Yes, we will have a link to the presentation and the recording of this webinar on the MMP fraud site, which is on the slide here. And how do the courts respond to employee fraud as a result of addiction? Is this even a consideration in the loss that weighs in favor of the employee?
Yeah, from my experience, it hasn't weighed in terms of collecting on the loss, getting your judgment. I mean, the employee still stole the money. I've had a few cases where where there's been a gambling addiction, and in those cases, we've gotten our judgment, no problem. Obviously, there's just some like mental health considerations that we want to take into place and take into consideration, and the courts just might be a little more, lenient towards those employees in terms of procedure. But I think at the end of the day, you're still going to be able to get your judgment.
And I think where the courts would be considering some of those other factors may be more so on the criminal side. Is that your?
Yes. And so I don't take part in any criminal prosecution of the claim, but in the cases that I know that are mine that have resulted in a criminal conviction, still the court grants restitution in those cases. But yeah, it might go to sentence. Okay, thank you to everyone who joined today. We appreciate your attendance, and we really enjoyed giving this presentation. So if you have any questions or comments, feel free to contact us after the fact.